Hello, everybody, and welcome to another forward look at GameStop for the week of 8/30 through 9/3. We're going to be taking a look at some of the theories I've been kind of mumbling around this week, and we'll be looking at our technical analysis for the coming week and a little overview of what's going on with the market. First things first, let's dive into some of the theory about what's happening here and these seemingly quarterly cycles. For the previous two consecutive Fridays up to last one, so 3 weeks, starting 3 weeks ago, we started ending the weeks above max pain. That's usually indicative of a turnaround for GameStop. Um, Closing Friday of last week at 204.95, about $25 above max pain after that huge run that we had on Tuesday. This is most likely going to lead into a similar formation that we had before with the ascending pattern and that constant growth rate. And this is most likely going to play out on Monday and Tuesday of each week as we move forward, as that gamma exposure and stuff is covered on T+2. Um, so this is probably an effect of the delta hedging and in the money calls from the previous week, leaving a large amount of gamma exposure to be covered on Tuesdays. An attempt to reduce that exposure by covering earlier in the week to avoid cheap end of week gamma ramps that are being built up by the long funds, and also an attempt at the end of the week um, to profit most off of max pain before the next cycle. So essentially, they let it run Monday and Tuesday, drive it down at the end of the week to minimize exposure for the following week, so on and so forth. This is our previous run from June and July. As you can see, the pattern kind of began back here after this big short attack. And then moving forward, we had incrementally greater and greater growth right up until earnings, at which point shares were released and the price came down. This time it's a little different, as we had a kind of a correction in the earlier parts of this. As you can see here, this is our current run up. Um, and this is the expected trend that you can see here in orange that I predict for the next coming weeks. But you can see here at the beginning, we kind of started off a little choppy. So instead of having that constant ascent into it, we kind of just did it all at once right here. A lot of this had to do with that market correction and, the 7.5 million shares that were sold over the course of the downward trend leading into this. The next thing I want to go over is SPRT. Is it a distraction or a play by long hedge funds? I'm still not entirely sure. I'm continuing to dig into this, but some of the evidence that we currently have is that it has an extremely low float of 15 million shares, a third of which are owned institutionally, and in the money options chain that represents more than the available float. The same institutional parties involved on SPRT are also involved with GameStop. Um, it has extremely low ETF exposure, which means it's unlikely to be in any of the meme stock derivative baskets, such as options or swaps, and hence there shouldn't be any correlation in price movement. And yet, we have found that there is a correlation in price movement. Massive squeeze potential with very low capital deployment for the longs. It means it's really cheap to squeeze it because of its tiny float and its cheap stock price. Um, the same long-term shorting visible on the monthly OBV as you see on GameStop, implying that there's a large naked short position on the stock as well. The timing, SPRT started to run right at the beginning of that quarterly options rollover that most likely caused a run on GameStop as well. And reported short interest remains above 60%, actually increasing after Friday's run to its all-time high or all-time recent high at $60. Um, this is some of the data we had proving that correlation between GameStop and SPRT. Thanks to Carl for that. Um, Next and the last thing I want to cover is the gamma exposure. There seems to be some evidence coming to light that in the money calls on GME are not being appropriately delta hedged, meaning that the market makers are risking exposure on GameStop, and that's very dangerous, right? If this is the case, the gamma exposure this week should be much greater than last week. I don't have gamma exposure data currently, but I'm digging into it. And let's dive into our technical analysis now. So this was last week's previous price prediction. I tried to mess around with it throughout the week and kind of try to find where the volume was going to take us next. And I really couldn't track that kind of consolidating volume that we had throughout the week. We went from 10 million to 5 million to 3 million to 2 million from Tuesday on. And so I'm not going to try to do that again this week. I'm just going to lay down the prediction because ultimately my original prediction ended up being the most accurate anyway. And so this is what we're looking for moving into this week. You see here we have a low trend, testing 150, slightly breaking through and coming back down to this long-term ascending trend that you see here. We have 4 possible tests of 350 over the next few days. If we break through, we have a very good chance of testing the upper resistance of this ascending channel, and possibly if breaking through that, even testing that resistance at $300. We'll have to see how this plays out, but the high trend does offer us a chance at looking at that. And then I wanted to kind of back out and show you how that looks, that price prediction looks with that long-term trend prediction. As you can see here, I kind of tried to overlay them. You can see that it matches up pretty closely, looking like maybe we'll see a rejection at 300, possibly falling back down to 250 throughout the rest of the week, and then moving up further at the beginning of next week. So we can look at some of our indicators to see how these trends are going to play out. MACD looking great on the daily, still only about at the halfway point of our previous run up, and possibly is going to play out over a longer period of time. Remember, the last run up kind of got halted in its tracks by that share offering. I don't expect that to happen this time. And so I think we'll just continue upward. And I think that could play out over the next several weeks. Stotch RSI coming up looking really good. Still about 14 points shy of our peak in July. But everything else looks spot on. And lastly, our ADX is actually showing a stronger trend and a more positive directional movement index. I think this looks great. It shows that we're moving upward and we're moving upward faster. So everything looks good there. So in conclusion, with the wide bid-ask spread as it currently stands, in the previous run-up in June on about 25, we're mimicking the run-up in June on about 25% of the previous volume. Meaning that if those levels of volume from June do come in, we can expect to see some really serious upside potential on the stock this week. Lastly, I want to go over the market. We got a lot of things going on right now. The Fed's announcing plans to taper. We have record-breaking storms rolling in, debt ceilings expiring, Delta variant cases skyrocketing, with possible lockdowns in the works. Inflation's higher than expected week over week. Every time we look, it's a little bit higher. And RRP breaking constant new highs. So the market keeps chugging along anyway, though. And I guess the bull case for this would be possible stimulus coming in with the new COVID strains, and the infrastructure bill being bandied about in the House right now. There's just so much liquidity in the market, it doesn't seem to want to give up. But I think at any time with all this just insurmountable bad news, this could really tank, and it could really tank fast. Our Schiller PE ratio is actually up 0.59 points this week, which is the highest increase we have seen since we started tracking this on the last correction. So big jump up on the Schiller PE ratio. Remember, stars burn brightest before they go supernova. So, um, and that's about it. I guess in conclusion, with the market crash looking more likely every day, this could be a serious upcoming catalyst for MOASS. Additionally, we see some pretty good evidence that not only are we running up again, we are running with a bid-ask spread that creates the opportunity for large gap ups and violent upside potential. Any significant surge of buy pressure at this point could lead to massive price increases. The constant gamma rep setups can accelerate those increases, and former resistances already show next to no actual resistance. Is this it? I don't know. But I can say with confidence, it looks like we're a lot closer to MOASS than we have ever been. So buckle up and buy and hold, because this may be the ride. Thank you all so much. If you can, please drop a like and a subscribe. It's a huge help to the channel, and I will see you all bright and early for the stream tomorrow morning at 9 a.m. Thank you all and have a great night.